Is the US dollar about to sink? The real story of the gold reserve. In the darkness of the night, an underground vault of a central bank opens. Inside are stored not bundles of notes but shining gold bars, as if the world is preparing for some unseen storm. Outside, the markets look calm, but inside, meetings of reserve managers have intensified. The question is not just why gold is being bought, the question is how much trust is left in the dollar. If the world's most powerful reserve currency is gradually facing weak confidence, then in which direction are ordinary investors, governments, and global trade going to move? Right from here, the fear begins. Is the US dollar really about to sink, or is this just the beginning of a changing global power balance? To understand this story, we have to step back a little from the sensational headlines. The dollar is still the world's most important reserve currency, but its grip is no longer as absolute as it used to be. In the IMF's reserve data, the dollar's share is still the largest, but over the last several years it has gradually come down. This is not a crash, but a gradual shift. Central banks are not suddenly throwing away the dollar entirely. They are balancing risk in their vaults, so that dependency on any one currency does not become too high. And in this very story of diversification, gold has come to the center stage once again. The same gold which many people used to consider an asset of the old world is becoming a silent weapon of modern geopolitics today. In 2022 and 2023, central bank gold buying reached historical highs. In 2025, the pace slowed down a little, but the buying remained very strong compared to the older era. According to the World Gold Council, central banks bought more than 863 tons of gold in 2025. This was less than the 1,000 tons plus pace of the previous 3 years, but it was still an extraordinary demand. Now the question is, when the dollar is liquid, treasury bonds pay interest and gold gives no yield, why then are central banks accumulating gold? Its answer lies not just in economics but in geopolitics. Gold is not another country's liability. Freezing it, cancelling it or sanctioning it is not as easy as currency assets. After the Russia-Ukraine war, the world saw that the financial system can also become a weapon. Sanctions, frozen reserves and payment restrictions forced many countries to think. Developing and emerging economies took this lesson differently. If geopolitical tension rises sometime, will their dollar assets remain completely safe? Gold became the insurance for this fear. It relies not on any government's promise, but on its physical scarcity and historical trust. The power of the dollar is still very big. Global trade, oil pricing, debt markets, foreign exchange transactions, and the depth of the US Treasury market make it unmatched. The world wants to move away from the dollar, but creating an alternative to the dollar is not easy. The euro is strong, the yuan is growing, but no one has a scale like the dollar yet. This is the reason de-dollarization is a slow process. It is not an overnight revolution, but a rebalancing that goes on for decades. But slow does not mean weak. Even with small allocation changes, central banks give a big message that the future can move towards a multi-currency and multi-asset reserve system. The Trump administration's America First trade policy intensified this debate further. Tariffs, protectionism, and aggressive trade negotiations increased uncertainty among global partners. When America makes tariffs a negotiation tool, other countries think about how dangerous dependence in both trade and finance can be. The effect of Trump's policies does not fall just on factories or imports. Its shadow reaches currency markets, bond yields, inflation expectations, and even central bank planning. If tariffs increase, goods can become expensive. If inflationary pressure rises, the Federal Reserve's interest rate policy can also be affected. Higher rates can make the dollar strong in the short term, but can make dollar debt expensive for global borrowers. This very fear pushes countries towards reserve diversification. The thinking of central banks is not like ordinary investors. They do not buy gold for daily profit. They manage reserves for national financial safety. For them, liquidity, safety, and confidence are all three necessary. The dollar gives liquidity, the treasury market gives safety, and gold gives a crisis hedge. Therefore, the real story is not dollar versus gold. The real story is of dollar plus gold and gradually a more balanced reserve basket. In the 2026 World Gold Council survey, many reserve managers said that global central bank gold reserves will increase in the coming time. This mood shows that the strategic role of gold is strengthening. This does not mean that the world will leave the dollar from tomorrow. It means that central banks are increasing their options for future shocks. The appeal of gold increases when trust decreases in the world. Whether there is war, sanctions, inflation, or currency uncertainty, the shine of gold suddenly becomes the financial language. But gold is not a perfect asset either. It does not yield interest, there is a storage cost, the price can be volatile, and trading it when needed is not as simple as currency. Still, central banks keep it because in extreme situations, gold works like a neutral asset. No foreign government controls it like a default promise. Even in the ECB's recent discussion, attention went to the reserve importance of gold. Rising gold prices and buying gave a changing picture of the composition of official reserves. This shift is symbolic. It shows that along with US Treasuries, the importance of gold in the global reserve system is visibly increasing again. For countries like India, gold is not just a tradition. The RBI keeps components like foreign currency assets, gold, SDR and IMF position in its reserves. When the RBI increases gold, it does not mean it is running away from the dollar. It means that the reserve cushion is being made more diversified. China, Turkey, Poland and many emerging markets have also increased gold accumulation at different times. The reason for each country can be different, but the common theme is risk diversification. Now the headline asks, is the dollar about to sink? Its honest answer is, it would be wrong to say so right now. The dollar is still the backbone of global finance. But it would also be wrong to say that the dollar's dominance is not facing any challenge. The world is gradually building alternative cushions alongside the dollar. This might not be the death of the dollar, but a slow erosion of dollar monopoly. For America, this is a warning signal. If policy uncertainty, debt burden, and geopolitical weaponization increase, the trust premium can decrease. The status of a reserve currency does not run just on military power. It also runs on institutions, rule of law, market depth, stability, and predictability. If the world feels that the dollar system is becoming a political weapon, then countries start making backup routes. This is today's biggest geopolitical message. But making a backup and leaving the main system are different things. In the attempt to get out of the dollar, countries might also have to face liquidity risk and market risk. That is why central banks are cautious. They do not make dramatic announcements, they just quietly buy gold, rebalance reserves, and change the risk map. The question of a market crash also comes up at this very place. Gold buying in itself is not a guaranteed signal of a crash, but it shows that big institutions are feeling uncertainty. In history, gold demand has increased before crises, but it is also not true that a crisis came after every gold rally. Correlation and prediction are different things. Therefore, this signal should be looked at to understand risk, not to spread fear. Central banks do not sell panic, they do preparation. Today there are many pressure points in the global economy. US-China competition, Russia sanctions, Middle East tensions, tariffs, inflation and debt levels all together increase uncertainty. Gold becomes a simple answer to all these risks. When currencies get connected with politics, the metal becomes neutral trust once again. But ordinary people should not run to buy gold blindly by looking at central banks. A central bank's balance sheet and a household's balance sheet are different. A country keeps gold reserves so that it can manage currency stability and confidence. A family needs an emergency fund, insurance, debt control, and diversified investment. Gold can play a role in a personal portfolio, but putting all the money in gold can also be risky. If the price goes up, there is joy. If it goes down, patience is needed. Central banks also do the same. They make gold a part of total reserves. They do not make it the entire reserve. Therefore, the most practical lesson is diversification. Whether it is dollar, gold, bonds, or other assets, excessive dependence on any one increases risk. The challenge in front of America is clear. It will have to assure the world that the dollar system will remain predictable, open, and reliable. Trump's aggressive trade policies may look strong to supporters, but global reserve managers also look at them through a risk lens. If allies and trading partners get tariff shocks repeatedly, they will pay more attention to alternative payment systems, local currency trade, and gold reserves. This is that very silent push which is called de-dollarization. This is seen more in behavior than in slogans. Countries speak less, but their decisions start showing in the reserve data. A little less dollar, a little more gold, a little euro or other assets. This is the new pattern. The future will perhaps be such where the dollar remains king, but it will not remain the lonely king. Around it, the space for gold, euro, yuan and regional settlement systems can increase. The biggest strength of the dollar is the network effect. The more people use it, the harder it is to leave it. But the network effect also runs on trust. If trust shakes repeatedly, people start making a second network, not immediately but gradually. The buying of gold is like the emotional and strategic preparation for this second network. It says that the world is not entirely comfortable with the one currency dependence. Now, the most interesting turn of the story is that the shine of gold is visible not just in the vault, but in politics too. When central banks accumulate gold, they do not give a speech to the public, but they send a signal to the markets. The signal that the uncertainty is serious. This signal is a message for Trump too, for China too, for Europe too, and for emerging markets too. Financial power will now be decided not just by the printing press but by trust. If America maintains trust, the dollar will remain dominant for a long time. If policy shocks increase, the world will speed up backup plans. Therefore, the question of the dollar is not of collapse but of confidence. And confidence builds gradually and breaks gradually. Today, central banks are buying gold because they know that in the coming years, geopolitics and finance will not remain separate. Currency is now not just a medium of trade but an instrument of power too. And when currency becomes power, gold becomes protection. So is the US dollar about to sink? No, right now the dollar is the biggest pillar of the global system. But does the world want to make some safety doors even without the dollar? Yes, and gold is the oldest, most trusted door among those doors. In the coming time, the market will have to look not just at interest rates, but at reserve movements too. Because the quiet buying by central banks is sometimes the loudest warning of the future. And perhaps this is the real suspense of this story. The world is saying nothing openly, but gold is increasing in the vaults. When powerful countries start trusting metal more than words, then understand that the global economy has entered some new chapter. This chapter is not of the dollar's end, but perhaps of a new test of dollar dominance. And the winner in this test will be the one who can balance trust, stability, and power. Because the world's biggest currency too is powerful only as long as the world holds on to it with trust. And when a crack comes in trust, central banks move out of paper and look towards gold. This is the quietest, yet the deepest signal of today's global economy.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.